Welcome to week 30 of my Trading for a Living challenge, where the goal is to make over $1,000 every single week, or just over $4,000 a month, trading with $125,000 in cash, where I've recently upgraded to a margin account to give me more buying power to place more trades. Now, the trading strategy that I've been using throughout this series has been a selling option strategy, primarily selling puts, calls, the wheel strategy, strangles, all that kind of good stuff. And throughout this whole series, I've given you lots of tips, tools, and advice on how to trade these kind of strategies, and that will continue for the duration of this series. So if this sounds like something that's going to add tremendous value to your trading, or you're just interested in this overall series, I strongly suggest that you smash that subscribe button and gently tap that bell notification, as I've got weekly videos, and a playlist is in the pinned comment down below if you want to check out any of the previous episodes. So if we have a look at week 30, you can see here that I achieved $437, which is 58% or $592 behind the weekly target. Now, if you asked me back in the first 20 weeks or so, I would be concerned with this number. But for those who've been following, around week 28 or week 27, week 28, I decided to move to margin, which gives me capital available to do more trades. But also I've been doing longer duration trades, which now has allowed me to be inconsistent on a weekly, but still allows me to keep pace with the overall monthly target. So as it stands at the moment, I'm not too concerned with this $437, because in week 31, I'll be rolling out all my current positions to the April cycle, which again will allow me to be able to collect more than $1,000 in 1 week, which will compensate any in-week losses that I may actually have. Plus also I do have capital available to spend to hit that delta in between, but more on that in a second. So as it stands, the monthly total is $1,500. The minimum goal is $2,500. And you can see here, I've consistently hit over $2,500 every single month, just to pay for food, rent, utilities, all that kind of good stuff. One of the good things about this challenge at the moment is the time actually spent on trading, because trading options, in my view, is a relatively hands-off strategy. Once you set the trade, you set yours, set it and forget it until you need to actively manage a position. It's not like day trading, where you obviously got to be looking at charts, looking at indicators and all these different things. It's a completely different style of trading. And that's why I actually love it, because it gives me time to do other things that are more fulfilling and priority inside life, and looking at this from a day job perspective. We have ticked up in terms of a cumulative tracker to 11%. So I'm $3.5 grand down between what a 9 to 5 job would give me versus what trading has given me. But I've saved 98% in terms of time aspect there. So what we're going to do now is, before we look at the trades, we're going to just have a quick look at the trading and the buying power situation. So again, $125,000 my broker allows times 2 in terms of buying power availability. I'm currently trading with just under 88K, which is 35% of the account. So there is money available, and I'm willing to go up to 40 to 45%. I don't really want to go any higher than that of how much I'm trading, in case positions start to go against me. I like to have capital available to me to be able to withdraw any moves that, like I said, do go against me. Now, if we have a look at the trades tabs, we can see that I placed 2 trades in week 30 for Coinbase and AMC. We'll go through those when we get to there, but let's have a quick look rundown of the open trades. We'll look at the charts, we'll do some TA on these current stocks, and let you guys know what my thoughts are on these particular aspects. So if we have a look here, Tesla is currently trading at around $206. I have 300 shares at $282, so way below my cost basis, costing me 42 grand in buying power. Now, again, back in the day, in the first 11 weeks, I was doing the wheel strategy, weekly options, where the approach I'm doing now, I probably wouldn't be assigned any of these stocks in the way I'm managing these positions. So going through this process has made me a better trader in terms of, when it comes to trading, as opposed to growing a portfolio, you don't, in my opinion, you don't really want to have these stocks, because if stocks go against you, you've got 42K in buying power sitting there, really, that could be better utilized doing other things. So I was selling covered calls against this long stock, but I've now converted this into a strangle. So what we got here is We've got a short call, which is deep in the money at 120. And I've got some puts to offset some of that delta at the 170 strike. So if we have a look at Tesla here, if I concentrate you guys on the purple section. So again, we have the 170 put and the 120 call. So again, this is an inverted triangle for those of you who've been following this, where generally a call strike should be higher than the put strike, which is your traditional strangle approach. And again, what this allows me to do is neutralize the delta. I think the delta in here is about 90, 95. So I'm pretty much as if like I'm holding long stock, but I already hold long stock as well. I'm quite long on my deltas here on Coinbase, which is, a short call is a negative delta, negative delta position, which I need the stock to really fall down to this level for me to exit this position. So I've been hedging this with the 170 put. And again, what my plan is for, I think it's this Thursday, where I've reached the golden 21-day mark in terms of rolling options out to the next cycle, is I'll be looking to move this up to the 125 strike and then doing what I need to do with the put option to roll this position for a credit. Because ideally, I need this 120 to be above the current price. So it might take me a few months, maybe years to actually get there. So I'm not sure if I'll even get out of this position by the end of the challenge, but that's what I need to do. We've got, like we were saying before, in the last 2 years, we've got some bullish diversions happening here. So we are expecting price to go down. We have a missed weekly pivot here. The monthly pivot has not yet been hit. So I am expecting what I call a rollover at some point here. So I need to be careful with my put option, but then equally, I need to be able to roll up my call strike as well. So again, a lot of things to think about with this particular position, and I'll let you guys know next week. This should be done by this week, as I'm recording this in week 31. So you'll see what the outcome is for that. So again, make sure you subscribe and stick around for the outcome of that. And then lastly, I've added in an additional short call at the 250, primarily for the same reasons. I'm expecting price to roll over, and we've got this short call over here with current price at 208. We've got some distance there, so I'm not too worried about that. I'll roll this out again for the next month and maybe potentially move it up or move it down slightly to generate more premium, depending on what I think is the right thing to do. So that's Tesla. We again have a very similar position on Meta, which I'll just show you on the chart. We've got an inverted strangle. So we got the put higher than the call. The only difference with this one is that my shares are actually also in the money. So I'm actually up on my shares. It's this call that's causing me a problem over here. Again, I was selling covered calls on the way down, and then Meta just started to ramp up, which then caused me a problem with this becoming a deep in the money covered call. So I closed out the covered call and then put this into an inverted strangle. So very similar to Tesla. What I'm looking to do on Thursday is push this call up to 110, 115, whatever I need to do, and offset that debit with the put here, hopefully making a small credit. But again, I'm happy to do that at break even just to get this call a bit further up. We can see here from a TA analysis perspective, again, very similar to Tesla, we do have a missed February pivot. It gapped up on earnings and it's now starting to kind of fill up this kind of gap situation here, which is what I expect Meta just to trail down here at least over the next month or so. Again, need to be careful on where I set my put strike on Meta. So that's what we're looking at over here for Meta, which is all good. AMC is one of the trades that I did. So we have at the moment a short strangle, which is out the money on both sides at the $2 and at the $23. So I'll show you that. Again, I have to minimize this slowdown because it's so high. So I expect this to expire worthless. I can't see AMC getting to 2, and I definitely can't see AMC getting all the way to 23. So what I did in week 30 to generate $140 is to sell another naked call for 10 contracts at $14, at $10 per contract at the $14 strike. So that you can see that over here. Again, we're trading at 577 and it has to just under 3x for it to get to that call. Again, relatively comfortable with that actual position, and I assume that position is going to expire worthless. And then the last one in terms of new trades is for coin, the 120 strike. So I have two short call positions, one for $105 and one for $120. And again, if we have a look at what it looks like from a TA perspective, you can see here that we are nowhere near this amount here. The stock has to pretty much double to get to this 120 call, and about 80% to get to this one, which, don't get me wrong, it is possible considering the move it did back in January. But similar to Tesla, similar to Meta, we have a missed pivot over here, which I expected to go hit at some point, whether that's for the rest of this week or early next week or even in March. I do expect this pivot to be hit at some point. But again, I'll continue to sell calls on this. The premium, the volatility is still pretty good on coin. So again, I will sell into that volatility. We've got to be mindful that it has earnings. Is it today? Yes, we got earnings today on the 21st. I think it's after the market close. So we need to also be mindful for that. It could push up, it could push down, whichever way it decides to go. So that now is a Coinbase. And lastly, we have Google, where we have one put option at $86. So if we have a look now at Google, we can see here that we have the 86 put option. Google is currently trading for 93. So we do have, what's that, about just under 10% kind of leeway gap here. We've got these lows here which could act as resistance, but again, I'll be looking to roll this position out depending on what Google actually does in the next week or so, depending on where it's going to be. But it's flirting very nicely with its February pivot. It does have a missed pivot up here, so I do hopefully expect Google to go on a bit of a run as well, or to consolidate within this kind of area over here. So those are all the trades that I've done. Hopefully that kind of gives you guys a lot of view on how I'm trading this and where my kind of thought processes are. I'll be looking to roll all of these positions out for another month, which is going to bank me hopefully around $2,000. That's where I want to get to, because if I can get to $2,000, that covers the next 2 weeks, and then some shortfall, and I can make up the rest inside the last week by doing adjustments or opening a couple of new trades there, and then managing these positions accordingly. So I'm expecting to spend a bit more time in week 31, but hopefully that gives you the roundup for week 30. Make sure you subscribe, comment if you've got any questions, and I should see you guys in the next video.